Hello everyone, this is Sam Wong. Yes, it's another great week. The market have been really interesting for last week. Want to show the picture really quick about the 10-year Treasury yield, which you can see dramatically. It was spike up. For those who may remember, around the month of mid-March and the month of May mid-May, that was really the time. If you tap back to look at what happened to the Nasdaq in particular, the market was actually really was very being pressure a lot because of the yield curve higher, meaning that the cost of capital borrowing from the growth stock, actually took a hit. So, that wasn't a really pretty picture at the time. But then, of course, with that, and then the yield curve dropped it off. There was some good news, and then you drive the market, rebounding into another high. So just want to lay this 1 year perspective, a 10-year Treasury yield for you to look at. So to understand the relationship between the FOMC meeting, which Powell was, or Yellen talk about, asset tapering interest rate, how does that have the relationship with the stock market, and why every time the meeting, about to happen, there's always a volatility. And then you can see that in September, after the meeting, the treasury yield actually dropped. But then, with the what happened to the Chinese real estate and a couple other reasons, is actually, making the spike again to come back up at 1.49, and then you drop it down to 1.453 to end at on a week, this week. In S&P 500 behavior, just want to show you a different perspective rather than 5 days in a month. You can clearly see that there was a pushback, starting at the high, in the September 15 range. Actually, obviously, if you can see as a P 500 for the month of September, actually was slipping. During the day, the intraday, you could bounce back, but this is reflection of the end of the day, and it actually was in the downward trend. In particularly, very close to the FOMC meeting, the market was actually receive a lot of pressure with the largest real estate in China also running in risk of defaulting. That compounding the issue with Delta variant remains high. So the market was been dropping off, and people were at that time, even though yes, 43.50, people still believed that it was still very high. So the market actually potentially would be believing a corrections or crash. But of course, it didn't happen after the FOC meeting. For those of you who listened to my, video that I made on Wednesday night, you actually clearly that if I was betting it correctly, that the Dow Jones actually did have a really strong rebound, 500 points. And on Friday, it was kind of slip, but then you end up with a slight positive as well. So it's going to give you a picture of what happened to S&P 500, and here's the Dow Jones. And the key thing, of course, right now is that you can see the picture of these two, and just the last 15 days or even for the month, they actually running a pretty very similar pattern where, when you get to the close to the FOMC meeting, the market was reacting not favorably, and then the day before the meeting, it was kind of rebound a little bit until the announcement actually head off, 1 o'clock, where Powell was basically saying that, hey, there's no urgency for tapering, but it will happen, and interest rate probably won't happen until 2020, second end of 2022 or 2023. So market received it as a welcoming message, kind of meeting the expectations. So clearly there was a clear rebound on Thursday. So just want to share the perspective with you. And for those who are listening and to my video on Thursday, hopefully you have made some money because you will have bought it in the morning or whenever, and then you will still make about really decent return, at least for the cruise potentially will earn 4% plus, bowling will another 4% and so on. So people who listened to my video earlier, this may be a little bit repetitive, but just bear with other people trying to summarize it in a shorter version on Monday and Wednesday what happened and pick up from Thursday. So market was down the week before Friday, September 17th. Monday was definitely not a good day with worries about FOMC meeting along with potential exposure and fear one of the largest real estate Evergrande may face bankruptcies. China's central bank, however, injected $17 billion of cash into the banking system Thursday in an attempt to calm some nerves. So just to let you know that China would not directly save Evergrande, but to make the system, the financial system, whole and stability of the economy, you basically have giving some support to this, to inject more money. Tuesday market will rebound slightly. Tencent also announced at that time share buyback plan at around $448. That's Hong Kong dollars, which will help stabilize the share price. It depends how you interpret the minutes from FOMC. There's no anticipation of interest rate rise until year of 2023 or end of 2022. Though there are improvements to the overall economy, the last month unemployment increased even after the end of extended unemployment and the benefit and decrease of retail activity evidence the economy may take longer than anticipated to be recovered from the pandemic. The intention is still have for full employment. This remains as a focus of Fed. Along with that, U.S. announced to lift restriction for international travelers, and the FDA on Wednesday authorized booster shot of Pfizer COVID-19 vaccine for seniors and others who are at risk, high risk for the virus. The news drove market the other way around, which is kind of rebounding from the deep side that almost lost a week or so. For instance, bowling was up 4%, NCLH, the cruise stock, was up 4%. Price was up 0.91% after hour on that Wednesday. FAA and MG, except Facebook, were up. Global market, which is Friday, extended again on the relief the lack of immediate typing for Federal Reserve and state of extension for and state of execution China Evergrande. Norway Central Bank became the first major advanced economy to raise interest rates since the pandemic, while Switzerland also left its key rate unchanged. Both retail and institutional investors bought $1.9 billion worth of stock during this week's sell-off on Evergrande deal. Then restaurant. So just to help you why the market is kind of going down, but then rebounding because the obvious people were seeing the other side of the tunnel, the bright side of the tunnel. So they actually bought it at the dip, which you will see during the last couple of months. I mean, there were always kind of deep buy at the dip mentality to try the market. We're going down and going back up, and we didn't see the drop as significant as you would be probably in the month of March when you look at it with the graph where have demonstrated before. Like you can see the month. If you look at the yield, which is kind of reflective to and probably the March and May timeline, they will decline a lot more significant. In Salesforce, Second restaurant stock rose 4.2% after owner Olive Garden and Longhorn Steakhouse reported strong first quarter result and raised its 2022 outlook. Salesforce stock rose 3.3% following the software company lifting its full-year revenue outlook and offering upbeat 2023 guidance. Nike, however, delivered earnings and revenue surprise of 3.57% and negative 2.33% respectively, and stock dropped 3.94% after hour trading. The company has lost 10 weeks of production for its factory in Vietnam due to COVID lockdown and has also faced big delay in getting shipment container across the Pacific. Costco, COST stock rose 2.2% after a strong quarterly update that featured renewed offering of essentials. Application for U.S. state unemployment benefit unexpected rose last week. Oil prices rose on Thursday to their highest level since late July, and after U.S. crude stock dropped the lowest in 3 weeks and end of the week $73 per. AIA reported yet another crude oil inventory draw. Cruise company CCL confirmed that it was on track to resume over 50% of its fleet capacity by October. Its share valued more than 4%. In megatech, Apple added recent gain, investor talk up the prospect and improved iPhone sales. While market may have told you that the decline early section Friday mix were due to the potential default Evergrande, I believe it was really a result of profit taking. So what happened was, you have a down day where you have some traders or people buying at the dip, and then the news came out, FOMC confirming looks like the prospect is better than expected or in line with expectations. So then the market just actually start having behavior buyback and rebound from the dip. So people didn't really like, let's just say, liked it to hold the stock over the weekend. So then there will be some same pressure, especially day trade that they have profit from the previous day purchases. And also the other factor is the yield on the 10-year Treasury rose to 1.43%, while the yield on 30-year Treasury bond reached 1.947%. This also gave some investor anxiety about what will happen next. The bond market, however, appears to have responded appropriately to this shift in the Fed stance, and with raising on the shorter end of the yield curve. The longer end of the curve has seen rate rise as the market adjusts to the prospect of Fed pushing rate high over the long term. So we kind of not really surprising, and it was really kind of normal from the yield curve perspective. And then, like I said in a lot of video, and so the short term still in between less than 1.75%, not like last time in March, and able jumping up to that rate, which is kind of around 1.5%, is actually pretty steady and healthy. Oil price ended with 73, just covered. Gold was flat at 1745. Cryptocurrency declined again. Bitcoin trade low at the level of $43,000 at the moment. Although the Fed may be, after the Fed indicator, it also come back from the high of 25 to the level of 17.5, meaning that it was actually more purchases than the selling pressure. The positive reaction in the market suggests that investors are more comfortable with the possibility of Fed tapering, said Taylor, Evergrande investment analyst at Gradient Investment in an interview with Investing.com Thursday. There's about 3.4 trillion on the sideline in money market accounts, so any type of correction that we get, whether it's 3, 4, or 5%, that cash will be put back to work. And like I said, I think that's what holding up the market, which is, again, the buying at the deep mentality. While it's difficult to know for sure that debt will be repaid, Chinese government has prepared for the worst case scenario and also created a task force to analyze the current situation, actions to be taken. As a different topic, Huawei executive return home may also signal a better relationship between U.S., China, and Canada. As I previously said, countries should work collaboratively together as a partnership, if not alliance, to fight COVID-19 and to rebuild a stronger global economy better than ever by continued innovations and trades. We will see if this news will drive Asian market high beginning of following week, because at this point I'm recording this, Asian market haven't opened yet. There are a number of issues China has to manage, but I believe it will happen eventually when China policy makers are determined to achieve and deliver what they've committed. So the 8% GDP for the year, you probably still stay there, only a few more months to go. The Evergrande, which already Chairman Xi Jinping came out and talked about how and what he has in mind to make sure this follow through. So I think, and the reason, policies that kind of still at the testing point at this to see if it will actually helping the poor people. Again, the richer people get too rich, and so you're trying to balancing between the rich and the poor, and obviously middle class always suffer from that. Evergrande is poses a risk, and a threat in a moment, but also creates opportunities. So you got to remember that where always create a threat, it always is a light of opportunity. So, when people look at really bad, that some people actually will buy back at a deep, or some people will see it going down, so they will do put options to push the market down. But in either case, some people can benefit from that as if their vision is correct, the market follow. The market, however, is expected to be volatile with various reasons too, in the coming weeks. September 30 government funding deadline. If the U.S. Senate vote on Monday, that's enable a suspension of the debt ceiling. Chairman Powell will testify before Congress on Tuesday. This assumes, however, will be in alignment with what was being said at the FOMC meeting. October effect, which is the month of October, historically stock will be declined. Of course, there are exceptions, and we are in the earnings season soon again, so that if we have some of the stock and company prove it to be resilient, maybe actually will help to push the market higher rather than dropping. Investors need to be careful though at this point about selection and try not to be speculative. For example, you don't want to buy a stock that don't have a growth, don't make money. You don't want to try to speculate and buying options that will actually going to hurt your portfolio. And colorful CCL, Microtechnology, MU, Bed Bath & Beyond, BBBY, and Toast TOST will announcing earnings next week. All three major U.S. futures are positive at this point Sunday, but again, that indication may not reflect what let's happen in the day of trading. For the one I will recommend again, Cruise, airline stock, Disney, Pinduoduo, Baidu. I'll just continue monitoring those and give you an update, but I'm basically waiting for another 5% upswing for this short sight for the short term before I probably will advise you walk out. So while I think the market in October is in risk, that still have some room. The market will push further up first before you decline again. So you just have to remember that, but you gotta be watching out for that carefully. And again, if you pick the good stock, they're already undervalued. There's already get beat up so badly and crash. Even if the correction happen, you will not necessarily be penalized or at least minimizing the effect because they won't be penalized earlier of the days. But you can see some stock like FAAMG maybe. They have been really, at a really record high now, so potential they could have slipped back. You can see some vaccine stock, which price, as you see, people not willing to super shot. So the stock have actually gone back up from the earnings reporting $51 back to $43 again, where I bought at. So at this point, I'm flat. I didn't make any money more in price. And Moderna was still $400 or some dollars, which to me is still too high. Processing chips at this point, wouldn't necessarily recommend to buy anymore, but if you do, you probably will be still okay for a year for this quarter. But after that, next year, when you will catch up, the demand will be back to balances. Then these stock I don't see how they can be that at that high value anymore. Even though they may continue to still reporting profit. I hope this is gonna help this video, help you and I hope we'll have another exciting week and you and myself and everyone will make money happy. Thank you.